Hello and welcome to Commodity Champions. I'm Manisha Gupta, and gold clearly has established that it is Mr. Dependable. With the kind of gains that we've seen in the uncertainty tells you that it is imperative to have some part of gold in your portfolio, especially the given scenario that we are in right now, where the COVID numbers in the world are still increasing. The economic recovery is not to the point, and whatever economic data that we are seeing, the markets are skeptical on whether they are sustainable or not, and whether they are actually being fueled by the huge stimulus measures that various global central banks are putting out. And add to that the US dollar index, which is trading at a 2-year lows, and these dollar and gold are inversely correlated. So every time you see dollar decline, we do see some gold buying coming in from those levels. But the big question right now is that as we are trading at all-time highs in gold in the Indian markets, in the global markets as well, from here on, what is the scenario playing out as? Is it good to invest in gold and silver even now? If you're holding your positions, should you be doing profit taking? And if you want to buy now, what are the various avenues that you should be putting gold in? We will address all of those questions with the guest, and we'll take in some queries from the viewers as well. We are now joined by Mr. Shekhar Bhandari, who's President and Global Transaction Banking Department at Kotak Mahindra Bank. Philip Newman is Director at Metal Focus, and Adrian Ash is Director at Research Department at Bullion Vault. Gentlemen, hi. Thank you so much for joining us. First of all, to you, Shekhar, and with the kind of run-up that we've seen in the Indian markets for gold prices, what has been your sense? Is the buying still continuing? Do you see redemptions at these high levels yet? We'll try and go back to Shekhar yet again. But Philip, that question to you really, how are you looking at the global markets right now? We've seen great gains coming into the markets there. It has been one big string of markets. Actually, if you look at the gold prices, we started this year with nearly $1,500 per ounce. 1450 is the kind of low that we saw being hit in the month of March and April, and then a surge all the way to $1,980 per ounce. Let me start with you, Adrian, first. How do you read the run-up into the gold prices? $2,000 per ounce just seems like a formality right now.
Yes, I'd agree absolutely, Manisha. I think 2,000 is just a number. 1980, both are, 3 times this week now. So maybe that's the new top, who knows. The momentum, I think, is most remarkable. Gold has now risen 8 weeks continuously in the US dollar. I think that's the best run since 2010. A lot of momentum coming in there, and I think that's pulled in a lot of hot money, frankly. We saw speculative money actually retreat the New York COMEX earlier in the year during the COVID crash. There was obviously a lot of credit to brokerages. A lot of hedge funds pulled back on their positions. That money has suddenly come rushing back in, and I think that's really what's moved gold higher in the last couple of weeks. So it's very difficult not to see this move as a spike. The question, of course, is this a spike like September 2011, like January 1980? Or is this a spike more like May of 2006, where gold then did retreat a little bit before moving very much higher for a much longer period of time?
Oh, well, yes. But, even as we are at these dizzying heights and uncharted territories, Adrian, would you say that the momentum is still on the higher side? Because on the charts, it clearly is getting overbought. Do you think people would now start taking out profits? Or with the kind of scenario we are in, where there is no improvement really, we could be looking at further gains?
Well, we've certainly seen profit taking on Bullion Vault this week. I think overall for this week, clients are about balanced between buy and sell, but at very strong volumes. Silver as well. I mean, silver, we've had a record week for silver trading on Bullion Vault. Again, customers are pretty evenly matched between buyers and sellers overall. I think the key thing is this momentum, very short term. Yes, the RSI looks very overbought. But the economic backdrop, the financial backdrop to what has driven gold higher for 2 years now, this move really began in the middle of 2018 and really began to accelerate last summer 2019, long before COVID, first broke out. Those drivers, monetary policy, interest rates below the rate of inflation, poor economic outlook long term, those haven't changed, and it's very difficult at the moment. Of course, the uncertainty over COVID is what's really, been helping gold move so much higher, so much faster. But I think the long-term economic picture does continue to look very supportive.
Oh, it does, yes. And while I have my questions for all of you gentlemen, we also have included some queries from our viewers this time around. And I have a Twitter query from a user, Sudban1998, who wants to know if the gold and silver will see any corrections in the coming months at all, or is this a one-way line? Adrian, exactly what I was asking you. Are we looking at any corrections at all? Because there has been a pause in silver, not so much in gold.
Yeah, I mean, I think it has to be expected. I think, we have to expect there to be a pause at least. As you say, it looks very overbought on our technical analysis. But, when will that come? How deep will it be? I think investors, long-term investors who are waiting for a pullback, I think this is impossible to time. How far do you expect it to drop? Let's say gold does pause next week. What do you want? Do you want a 1% pullback, a 2% pullback, $200, $300? How far down before you suddenly flip the psychology and say, oh my, gold is now crashing. I'm not going to buy it now. It's very, very difficult for a long-term investor, I think, to try and time this. One suggestion we have for Bullion Vault customers, particularly new investors, is we say, look, if you have, let's say, $5,000, $10,000 that you wish to put into gold for the long term, buy $1,000 today, buy another $1,000 next week, buy another $1,000 the week after, average in over a period of time so that you're not putting your whole position onto one day at one moment. But more than that, I mean, it's impossible to advise.
Okay. So yes, if people are waiting for corrections, it's slightly difficult at time. But yes, if you do find some dips, then do have a go at a buy there. We also have another Twitter query, and this time around it's from Shankar, who wants to know if, like base metals, where we have seen copper, aluminum give good bets as well, the returns have been quite positive in the last 4 months. He also wants to know if it is the right time to invest in a sovereign gold bond or ETFs right now. Shekhar Bhandari, why don't you take a go at that?
So gold has been the biggest beneficiary of what has happened on low interest rates, record public debt. Now, I think it's global pandemic, COVID. The SGBs for last 3 tranches have done fantastic returns. But again, if you want to take a long-term view, which is what the SGB is all about, it does make sense to invest again in SGB and as a part of your portfolio, which always one has been advocating 5 to 8%. With the returns which are also available and linked to gold, it does make sense to invest in sovereign gold bonds.
Yes, it does. And Philip Newman as well is with us now. Philip, what is your sense? I want to understand the trends, first of all, because we have seen this constant buying, and the kind of data that Metal Focus World Gold Council has been throwing out does show that while the jewelry demand is at record lows, it is the investment demand which really seems to be keeping the gold prices higher. Do you see this continuing? Again, that's the same question to you. Are you looking at a redemption here in any sense from investors? And 2, do you see the jewelry demand now pick up going forward as the lockdowns ease?
Hi, well, I think taking those in reverse order and looking at the jewellery market, I think the challenge for jewellery demand, of course, is that, as you rightly pointed out, we're seeing lockdowns starting to ease, but then the economies are very struggling, disposable incomes are taking a tremendous hit. And then you overlay that where gold prices are. And of course, you think about, yes, we've obviously hit now record highs in dollar terms, but it's been some time, of course, that we've seen record highs in many currencies. In the rupee, for example, that's been something that the Indian consumers had to face for a considerable time. So I think that as the lockdowns ease, I think jewelry demand will still struggle for a period of time. And so that places really greater emphasis on institutional investors to really continue to rotate in favor of precious metals. And I think that's something that we will see continue. And I think to go to a point that Adrian made at the very beginning, that $2,000 is certainly in reach. It seems just a matter of time, it's more when rather than if, that we will see that happen. And I think that is something that, in terms of whether, we have a spike in gold or prices remain elevated, I think from our point of view and the work that we've done, we think that gold will certainly remain at this level and I think continue to strengthen in the months and quarters ahead, to be honest with you.
All right, so further gains in gold prices, readying ourselves for more all-time highs here. But you know what, we are getting some Twitter queries on this show. And Philip, why don't you take a go at this? This is from Young Pretender on Twitter. He wants to know how much physical gold COMEX has for delivery. He also wants to know if it is in danger of a default in the next couple of months. I don't know where that comes from, but a question even nonetheless. Philip, what would you answer?
Sure. I mean, I don't have those figures to hand, but what we've certainly seen over the past few months are very heavy inflows into the COMEX vaults. There's no doubt about that. I think in terms of the default, certainly not. I understand where the question comes from in terms of the price disparity that we had between COMEX and London, and there were very good reasons for that. And as I said, in response to that, you've seen very heavy inflows into COMEX to really rectify that issue.
Point taken. So that is your answer there. But you know what? We have to really wait for a short break right now. We will take some more Twitter queries when we get back. And we'll also try and get to know from our guests on where do they see gold prices going forward in this year and the next. Welcome back. You're watching Commodity Champions, and our focus clearly was on gold, where we have seen all-time highs, a string of that actually in the Indian and the global markets as well. I still have my experts with me, and we have some more Twitter queries as well coming in, and we'll get to that. This one is from Billionaire. And he wants to know if the decline in gold imports will persist. He also wants to know if the gold prices will correct anytime soon. Shekhar, why don't you take that? Because we've seen the gold imports into India continue to decline. It has been quite dismal, actually, when you look at the previous quarter at just about 11 or 12 tons. What is the scenario emerging as right now?
So I think part one, the gold prices have increased year over year in Indian rupee terms by around 55%, 55. The uncertainty and the risk still remain front-loaded and remains still persists, which does mean that the immediate decline in prices, which I think many may expect, may not be in near term. You also find that the debt to GDP, especially I call the US economy, I think has risen from 106% to almost 133%. And that is what I think Italy was somewhere in 2018. So I think over there we classified them as not very healthy. And this is what is happening to the liquidity part, which is happening in the US. So Fed's dovish monetary policy will have an impact on the overall prices. I do not foresee significant downside risks to gold currently. Will there be a significant upside risk? It has already risen 55%. The uncertainty and the risk are inbuilt. You don't see that getting mitigated or this thing to some extent. So you will be in and around these levels for some time with a limited upside.
Okay. The other thing that I want to bring about is the currency, because we've seen the dollars kind of lose its king status, and we've seen the high-yielding currencies, the G10, the emerging market currencies actually do well in the month of July. Adrian, this one is to you. How much of an impact of the currency do you see now coming in for gold? Because we've been having those talks on currency debasement, the weakness in US dollar, the huge stimulus measures, all of that has had its view.
I think that, it's a critical point. And for investors everywhere, a key issue is to look at your own currency. The dollar gold price reaching new record highs this week, I think it's created a lot of noise. There's been a lot of headlines, of course. But, as Philip pointed out, we've already had record highs in all other currencies coming into this. And it was only dollar strength. Dollar's now a 2-year low on its index. But it's still relatively strong on an historical level, and we were at multi-year highs in the dollar index just a few months ago. So I really question the idea of the dollar losing its dominance as the #1 global reserve currency. I don't see a competitor stepping forward. It's certainly not the Chinese yuan. I don't think Beijing has any intention of liberalizing its currency market such that the yuan would be freely convertible. We see that again in its gold policy, the same as India. You cannot export bullion from China. You cannot export bullion from India. And those kind of exchange controls make it impossible for China to become the issuer of the reserve currency like the dollar is. It's because the US dollar is so freely available, and the Fed will make more of them when everyone needs them. Oh. But what that does mean, I think, is that while people are concerned about a change of regime in the global currency markets, then where do you sit and wait? And maybe gold is one of those places. I think we've seen this amongst emerging market central banks. And I think we're certainly seeing it amongst larger investors now, a turn towards saying, okay, I don't know what will replace the dollar, and I don't know when that might begin to happen. Gold is not a competitor currency to the dollar. Well, but it might well be a store of value in the meantime.
Oh, well, yes. Philip, this one is to you. So we know that the scenario does support gold buying, at least having some part of it in your portfolio. At these levels, one question that everybody is asking is, should one be buying gold at these current levels, and in what form?
That's a very good question. I'm in the fortunate position of Metals Focus that we don't offer investment advice. I think what we are seeing, though, is more investors, be it retail or institutional, looking to hold gold. There's certainly that desire for safe haven. There's concerns, of course, what's happening with the stock market, hence why we are seeing a rotation. And given where interest rates are, that sort of rules out bonds pretty much, and therefore that benefits, for gold and silver for that matter. In terms of what form, I think it really depends on really what you're looking for. We've certainly seen massive inflows into ETFs. They have hit successive record high levels. Also seen decent buying of bars and coins. There's no doubt about it. So I think it depends on what really you're looking for, but there's certainly lots of vehicles out there. I think many of them have been very successful in the past few months.
And we have another Twitter query coming in. This one is from Pratik Bhavsar, and he has tweeted to us with a query saying that he wants to know if gold sovereign bond, gold ETF and digital gold are currently better investments than physical gold. Shekhar, why don't you take this up? And while we have seen this changing scenario in India, even as forced on by the lockdown, but we have seen people actually go online. Shekhar, what would you say to Pratik, who wants to know if it's better to buy it online than physical gold?
I always have been a promoter of a digital part of the world, and digital gold still makes sense. It can be in the form of sovereign gold bonds or an ETF. It is safe, it is secured, it is pure, it is linked to the price of the real gold, and it has a good liquidity. Oh, yes. If you are in sovereign gold bonds, there is a return on top of that. Combination of all these put together, if you want to see it as an investment, sovereign gold bonds and ETF becomes the best forms of having gold.
Yes, and on top of that, there's a 38% gains onto that gold prices also this time around. Gentlemen, I'm very short on time, but I want to come to each one of you to ask you on what is your sense between gold and silver, where would you want to put money, and what are your targets on the higher side? Very short on time, but I would want that one-word answer from all of you. Shekhar, why don't you go first?
Between gold and silver, the silver looks more attractive right now, and I generally am more in the dollar terms. I look at the price, so gold has an upside which is limited, and silver should be double digits in my chart.
When you say limited, what levels are you putting out?
I had been, I think earlier when the gold was at $17.10 on the show, I was at $2,000. We are at 1980 and 2000. So I think your show is target on that. I would like to be, I think, see it for a few more weeks before one can think of, I think, how does it proceed from here.
Adrian, same question to you.
I think for the long-term gold, gold is making new record all-time highs and has continued to do over many decades now in big swings. Silver, I think for short-term, I think silver does look very attractive, but we have seen a very, very fast move in silver from the lows in March. And I think if we are to see a correction in precious metals, I think silver may offer a short-term opportunity. Wait for a dip, come back in.
Mm-hmm. Philip, what is your sense? What's your advice? What levels are you watching out for?
Well, I think that silver, of course, is far more volatile. So what we've, of course, seen, as Adrian pointed out, is the upside since March. Gold, I think, this year comfortably obviously hit 2,000. Silver could still gain a little bit, but it is such a volatile metal, and I think that can be a bit of a deterrent. And, of course, with the election in the US, the trade war with the US and China will come to the fore more, and I think that could weigh on silver.
Okay, so it's silver it is then, and that has a silver lining as well. Yes, silver hasn't yet, it's still too far away from its all-time high, so it has a lot of upside to be there. But stay invested in gold, and as our experts have told us, whether it's jewelry, ETF, gold funds, whichever way you want to include it in your portfolio, it must be a part of it. Thank you so much for that, Shekhar, Philip and Adrian, for joining us today on this very special edition of Commodity Champions. With that, it's a wrap up on this show, but keep watching CNBC TV 18.